Hello, my stock market jobber community. All right, so things are working out kind of as we thought they would. Market's overstretched, at least equities are, starting to see reversals. And a big part of it comes right from the 10-year yield here that we've been talking about. It's going to be like inverse to the market. And I still think that's going to continue. And I think yields now are going to start to trend higher a little, and that's going to bring equities down some more. But here's our 10-year yield. And we can see we got down to this 454 level really precisely. If you watch these charts and you view them through the right prism of supply and demand, it's not understand how we can get such precise levels here. But anyway, as interest rates move higher, it's bad for stocks. The main reason, few people mention this, but the main reason is because companies have to borrow money to operate. They don't take money out of the cash register to pay their employees. They have to borrow. They borrow these short-term agreements or arrangements from banks, and they're short-term, but they're charged an interest rate, and the higher the interest rate is, the more it costs, and that eats right into the bottom line of their profit. But anyway, keep an eye on this, because if this starts to go higher, and we look at this every morning in the stock market jobber, that's going to bring equities down. Now, let's go take a look at the S&P 500. Remember, we were watching that important 437 level, and we didn't get through it. And here is the S&P. Now, why is, I'm going to just erase this down here, make it easier for y'all to see. Why is it that the 437 price level is important? In stock markets or financial markets, any market, some price levels are more important than others. That's just how it is. For whatever reason, the S&P 500 or the SPY likes this 437 level. Back in August, it was support. All right. Market's going lower. All of a sudden, for whatever reason, the buyers come out around 437. This is support. Then market rallies, goes lower, and now it gets back to 437. And guess what happens? Look at that. Well, not guess, but just look. What was support turns into resistance. How is it that support could turn into resistance? Well, there are people who bought back here who, assuming they held on when the price went lower, they're like, I made a mistake. If I can get out of this at break even, I'm going to. I shouldn't have bought it. I thought I was great for a while. New super duper hedge fund trader. But anyway, now I'm underwater. If it gets back to my level, I'm selling. So you get these remorseful buyers who bought over here, placing sell orders over here. And if there's enough, the level that was support becomes resistance. Now, why do we sell off of resistance? Well, you got these traders that are looking and thinking, gee, I want to sell. The market's moving higher. That's great. That means there's not enough sellers in the market, so I can hang out and wait. Oh, wait. Market's not moving higher anymore. There must be new sellers coming in. So I'm going to jump in there and I'm going to try to sell at 437. And someone else is like, oh, he's selling at 437. I want the buyers to come to me. I'm going to 436. So forth and so on. You get this snowball effect. But anyway, now we're back up to resistance. We reverse this. This is a reversal that looks like it's got a little bit of legs. We're not surprised. Let's go take a look at the financial sector, because this is really what we've been focusing on. Really kind of weak action here. Talk about an important price level. Now, this is really what I want to talk to you about tonight, is price levels, okay? Here is the financial sector. Look at this. This is the ETF that tracks it, 3360. Support last December became resistance. People that bought back here decided to sell after the price went lower, assuming they didn't sell a pair. Support can become resistance because of remorseful buyers. Resistance can become support because of remorseful sellers. People sold, and when the price went higher, a lot of them say, I made a mistake. If I can, I'm going to buy my shares back. Resistance can become support because of remorseful sellers. Support can become resistance again because of remorseful buyers. So this particular price level has been important for almost a year now. This is the financial sector. Now we're going to look at the technology sector and look at where it is. Trading right around this important price level. 176, 175. That goes back to December of 21, 2 years ago. All right. So we have the tech sector, the financial sector, together, they're about 40% of the weighting of the market. They're two very important sectors. They're both sitting on tight ropes. They're going to break one way or the other. Markets don't get to important price levels and just hang out. My guess is they're going to reverse and go lower, but sometimes the markets are easy to read, sometimes they're hard. It's pretty easy to read the market when you have two of the biggest, well, the biggest and the third biggest sector that are really important right on two important price levels. All right, everyone, thank you so much. Now come back tomorrow morning because obviously this is an ongoing narrative, not made by me, but made by the market, and we'll talk about it more tomorrow.